With Goldman Sachs set to launch crypto trading operations this month and begin dealing Bitcoin futures after previously walking away from such efforts, what will this mean for the cryptocurrency's future? Joining me here today on StansberryInvestor.com is Stansberry's own Eric Wade. He is the editor of the newsletter Crypto Capital. Eric, welcome to StansberryInvestor.com.
Thank you. Thank you.
Yeah, so I'm really excited to talk about the Goldman Sachs foray into Bitcoin with you here today, because you bring up an interesting point. We were talking about this offline. You were saying, what if Goldman Sachs and CME end up working around Bitcoin's legendary limited supply of somewhere over 18 million coins? What if someone creates futures for 36 million Bitcoin? I didn't even think this was a possibility. Is it, Eric?
Well, you'd like to think it's not a possibility. You also have to imagine, though, that what if they did, right? If it's their futures and someone decides, why would we stop at 18 million or 21 million in eventual Bitcoin that are out there, right? Because it's entirely possible. And it wouldn't be a good idea. We'll get into why that's not a good idea in a second, but it seems like it's entirely possible for someone somewhere to issue something that's not backed by an underlying instrument. Might not be in their best interest, might even be against the rules or against the law, but we've already seen that happen recently with stocks. There was a lot of talk about GameStop, for example, that is it even possible to have 140% of the number of shares that are issued sold short? And if you'd asked me that 5 or 10 years ago, I would have thought, no, it's not possible. But someone did it. And then what becomes really interesting to me, what really got my mind kind of spinning on this was, if they did it, let's go back to this Goldman Sachs and futures and CME. And there's a lot of, I would say there's a lot of faces to the coin on this, because initially you think this is great, they're getting in the business of it, and it's going to make it more popular, make it a lot easier for people to conduct international business. Imagine if you're a business and you have an obligation to pay someone a certain number of Bitcoin in the future. You might think, well, futures is perfect for that, right? Just like cocoa futures or orange juice futures, things like that. That's what the futures market is for. So you think, well, that's good. I like that. I like that large participants can stabilize their exposure, maybe even hedge, or maybe even make cash flow projections well out into the future based on this. So it really works positively for that. And it means we might see some really large participants increasing their comfort level with Bitcoin. But Bitcoin is limited. So let's go back to what your original question was what if some trading desk somewhere thought, hey, for a short amount of time, half an hour, 2 hours, something like that, what if we bump up what we can sell just to cover us until XY event happens, right? So I'm sure that's what would happen first. And I'm not picking on any one participant, Goldman or CME or anybody like that. It might be a regional firm, or it might be a foreign firm or somebody. But the point is that if someone makes that step, and let's just say, to make the numbers easy, there's 18 million and some odd Bitcoin floating around now. Let's say they bump up another 18 million Bitcoin, and then they sell futures against those. That's their problem, right? But where it starts to get really interesting is settlement date. And you'll notice, if you really get wonky and really get into the fine print, is some Bitcoin futures are settled in Bitcoin, what they call physical, even though there's nothing physical, it's all digital. But the nomenclature is physical settlement. But there could also be cash settlement, and that would be something where they say, okay, we don't really owe you a Bitcoin, we owe you the cash equivalent of a Bitcoin. And that's where I think maybe that loophole is that someone somewhere on some trading desk might say, Bitcoin is really overheated. Bitcoin is extremely expensive. Let's speculate a little bit on this. Let's let's take the other side of this trade. And they've done it in the past, many, many, many times. Mortgages, bonds, you've always got trading desks or some rogue trader somewhere, right? You've heard of rogue traders before that cost their firm billions of dollars because they make what looks like a brilliant trade and then it goes wrong. So I can just see this scenario where someone says, okay, I'm going to take the other side of this trade and I'm going to guess that it'll work out for me and keep all the profits. But then when it comes time to unwind it, first off, if it's a cash settlement, then someone's back office somewhere has to come up with that cash. And if Bitcoin has gone up and you can't go out into the market to get yourself some more, like our GameStop scenario, where they said, okay, hold on. Stop trading. Let us figure this out. And that's the most generous explanation I can come up with for what happened with GameStop, which was stop. Let us figure this out. Let us balance the books and then we'll reopen trading. You can't do that with Bitcoin because there is no one exchange that you can stop that with. So imagine this trading desk and this rogue trader or this back office says, let's create 18 million Bitcoin for a half an hour. Trade goes against them. Then they've got to settle. And whoa, what mind blowing if they have to settle in real Bitcoin because they don't exist. And this is the first time that we've seen the possibility. And it's possible that a huge financial institution could scrape up all the money they need to settle this themselves. But what if the other Bitcoin owners that were out there, the early investors and the people that are holding their Bitcoin in their own wallet, what if they refuse to deposit any to cover this? Where does it go? Who comes up with the money to settle this? And I don't think that's been answered. I don't think anybody's really afraid of it now because they think, oh, we'll settle when it's due. But you got that rogue trader scenario of what if someone does make some up or oversell and they think that they can get in and out before anyone notices. Because most rogue traders don't go into this thinking that they're doing anything wrong or dumb.
I mean, there's a lot of what ifs to this scenario, but you're painting, I think, a very important one to think about. But what would that do to the price, Eric?
Well, boy, you could think of it maybe having two answers to that as well, is depending on if the big enough participants were able to, okay, let's get SciFi on this. Let's imagine that they say we need to get this price down so they could maybe come up with something that says I've lost confidence in Bitcoin or something like that and try to cover their trading desk that way. Because trading desks are always coming up with problems that need to be covered one way or another if you get out of line. And okay, always may not be the right word. Frequently we've got market moves that come unexpected and someone has to cover it. And with Bitcoin, you can't just paper it over. You can't just make up more shares or sort things out on your own because it's global and there's so many other exchanges. So it's possible that there could be some sort of fear, uncertainty, doubt, some sort of FUD release, right? Bitcoin's broken. That's what I would do. And I'm taking the devil's advocate position here. Is if I was overly short Bitcoin and needed to clean that mess up, I would FUD. I would say Bitcoin's broken or someone at the government is going to ban it. And then I would hope the price came back to where I needed it to be and I would clean up my mess as quickly as possible. But on the other hand, you could see a short squeeze. If the word got out that XYZ large participant was short and, for lack of a better word, naked, exposed, then I would imagine that the selling would dry up immediately. And people would say, let's just wait them out, right? The deeper investors. And we're seeing, I've been talking to, people that are crypto capital subscribers about this for a while, is that we're not seeing a lot of short interest in Bitcoin because most of the most sophisticated traders aren't willing to take the risk that goes with being short here because the upside moves are dramatic. So short interest is historically kind of low on Bitcoin. And you would think, common sense would say an asset that's gone up 300-400% might see some increased short interest, right? It would stand to reason that speculators would step in and say, it's volatile, it's overheated, let's short it. We're not seeing a lot of short interest. It's not zero, but we're not seeing a lot of it because I think there is a healthy fear of what if I get caught short.
Right.
And now imagine that on an institutional scale. So obviously we went really down the rabbit hole.
No, I know. And I love the perspective you're bringing because I think it's an important conversation to have. Is there any way that as an investor, can you prepare for either one of these scenarios if you're invested in Bitcoin?
First off, don't use leverage yourself without having an extremely good handle on it, because leverage is where you introduce yourself to risk as well, obviously. If you're a Bitcoin investor and you hold your own Bitcoin in your own wallet, anything can happen to the rest of the world and you're safe. And that's really the titanium core of Bitcoin, is that once you get the Bitcoin into your own personal wallet, you're safe. You can't be subject to someone saying, we're going to stop trading and we're going to scoop all these up and we're going to reallocate or whatever it is they need to do in the back office, because it's not their Bitcoin to do that with. And that's why I worry that it's possible that someone could step on a landmine.
A legitimate concern. And I also have a feeling that Goldman is not going to be the first or the last to enter futures trading. So I want to get your thoughts also on Bitcoin ETFs that we're seeing pop up now. We've seen the one in Canada via Purpose. There's talk of VanEck now here in the States. What do you make of the ETFs, Eric?
I'd like to see it because it can make investing in Bitcoin and other current cryptocurrencies as well down the road, it can make it a lot more convenient. And I really like an ETF done well. I like the record keeping on that. Obviously, we have a lot of history with looking at ETFs that own another asset, like a real estate or a gold or something like that. So I hope that what we see is best practices enter into this, that assets that there's a question on who holds them, et cetera. I think you had mentioned VanEck as a possibility. That would be great for a certain kind of investor. And then there'd be other investors that just don't have any interest in that whatsoever, people that want to hold their own Bitcoin. And that may help to reinforce the analogy that some people say, well, Bitcoin has properties like gold. Right. Because we see gold ETF investors, and then we see other gold investors that say, no, I want to hold my own gold. Right. Or at least I want to know where it is. I want to be able to put my fingers on it if I need to. Right. And I think that would be another step towards maturity for Bitcoin, and then therefore extend that to the greater cryptocurrency industry in general.
I want to get to another important point that you highlighted in one of the recent editions of your newsletter, Eric, where you say that the window of opportunity for investing in Bitcoin is closing. So I want to know why you think this. I think this is important for a lot of investors watching who haven't stepped foot in Bitcoin yet.
Bitcoin has almost like a public persona as being really, really liquid and really volatile. Anything can happen with it. So I believe there are a hardcore of Bitcoin investors who will never sell, or I can't imagine the scenario it would take for them to sell. And these are, if you can imagine someone who's thinking they want to pass these on to their own family's future generations or use them for something way down the road, and that would be someone that would never sell. I think that pile, that group of people that are thinking, this is a unique asset, I think that's going to grow, and there will be more and more Bitcoin kind of taken out of the float, for lack of a better word, at the same time that we've got cities and companies and governments and larger investors and pension funds and private endowments that are thinking, I should have some exposure to this asset. So there may be that personality that we feel like Bitcoin has this up and down and trading and volatile. There may be less and less participants in that, and more who are saying, I just want to own this for 5 or 10 years or so. And that scarcity that Bitcoin is known for, if nothing else, just the fact that there are only 900 new Bitcoin mined every day should tell an investor, I'm competing with a lot of people to get my hands on this. And a lot of those people are going to start holding it longer and longer, because that's the tendency with Bitcoin over time. As much as we think of it as volatile, the number of Bitcoin being held by long-term investors tends to go up over time by people that aren't trading them.
So I guess, Eric, just as a final thought for investors who are still on the fence and are watching this video and are thinking, all the points you just raised, it's too volatile for me, it's too risky, I don't know. If I'm thinking wealth preservation, Bitcoin's only been around 12 years, gold's been around 5,000. Long term, it scares me to put money aside for my kids in Bitcoin. How do you cross people over that threshold?
Probably the easiest next thought for them, if they're watching this, put in your head maybe the possibility that the cryptocurrencies in general, Bitcoin specifically, we use that, the name Bitcoin a lot, but a lot of cryptocurrencies have a technological component and a currency component. So I would leave people with the thought of, you can approach this thinking, I like this technology that can function like a currency, and I like this digital currency that came with a lot of technology on board. And we know humankind will always have some kind of currency that we like. Beads and shells, or stones carved into a circle with a hole through the middle of it. Anything, gold, paper certificates, things like that, right? Humankind will always have a currency, multiple currencies.
Right.
And technology can't be put back into the bottle. So if you're having trouble seeing this as something that you're interested in, maybe look at it like that, and say, okay, I can see technology aspects and currency aspects, and I know the world and humankind is going to continue to increase our adoption of both of those. Maybe there's something to look into with this. And then you'll learn about the scarcity, and you'll look into how it's, Bitcoin and other cryptocurrencies are protected by these incredibly powerful networks. And you'll think, well, if I was going to invest in a currency technology, I would want it to be powerful and decentralized, and the government can't stop it, et cetera. And a global currency, it's been called the possible currency of the internet. Well, the internet's not going away. So let's buy something that we know, let's look into, or maybe invest in something that we know what the future holds. And because we can predict the Bitcoin mining schedule out through about the year 2140, we know how many Bitcoin they're going to be. And there's no other currency that you can say that about.
Eric Wade, Stansberry's Eric Wade, editor of Crypto Capital. Thank you so much for joining us here today on StansberryInvestor.com.
Thank you.
For more from Eric and some of his research here at Stansberry, check out messagefromeric.com. In the meantime, keep following our content on StansberryInvestor.com. I'm Daniela Cambone.